As of today, Thursday, December 25, 2025, the stock market is officially closed for the Christmas holiday, but the closing figures from the previous session for Omeros Corp, trading on the NASDAQ under the ticker OMER, are nothing short of breathtaking. The stock finished the last active trading session at 15.36 USD, which represents a massive intraday surge of 6.61 points or 75.54%. While most investors are taking the day off to spend time with family, the message coming from the Omeros charts is screaming for attention. This isn't just a random spike or a dead cat bounce. This is a fundamental repricing of a company that many had left for dead just a year ago. The immediate insight you need to grasp here, which most casual observers are missing, is that this 75% jump isn't just about a single drug approval. It is actually the culmination of a masterclass in balance sheet management and regulatory persistence. While the headlines are focusing on the FDA approval of Yartemlea for hematopoietic stem cell transplant-associated thrombotic microangiopathy, the real story for those of us looking at the numbers on our Fidelity trading platform or tracking our individual brokerage accounts is the complete removal of the bankruptcy risk that has haunted this stock for years. By securing this approval alongside a multi-billion-dollar licensing deal with Novo Nordisk for their other lead asset, Omeros has effectively moved from a speculative biotech play to a well-funded commercial-stage entity with years of runway. There's a fascinating tension between expectation and reality here. The market narrative for the better part of 2024 and early 2025 was that Omeros was a sinking ship. Critics pointed to their dwindling cash reserves and the repeated delays in the regulatory process as evidence that the company would never get its lead candidate across the finish line. The expectation was a slow fade into irrelevance or a fire sale of its remaining assets. The reality, however, is that management was playing a much longer game. They didn't just chase a quick approval, they built a data package that eventually forced the FDA's hand. If you were watching this through your Robinhood Investments or SoFi Active Investing account, you saw a stock that was beaten down to the single digits, only to explode once the reality of their success hit the tape. This massive movement in OMER stock during the last session was backed by staggering volume. We saw over 24 million shares trade hands, which is a massive multiple of its average daily volume. For those using the Interactive Brokers platform, the liquidity was there to support huge institutional entries. This level of activity suggests that the smart money is finally rotating back into the mid-cap biotech space after a long period of favoring megacaps like Nvidia stock or Apple stock. When a stock like OMER moves 75% on massive volume, it tells you that institutional investors are no longer just looking at this as a trade, but as a core holding for a biotech recovery. When you look at your Interactive Brokers account or check the analytics on the Fidelity mobile app, you have to realize that Omeros is now operating in a completely different financial league. Only a few weeks ago, they closed a deal with Novo Nordisk for their clinical stage MASP-3 inhibitor, zaltenibart. That deal alone brought in $240 million in upfront cash. For a company with a previous market cap that was barely double that, the influx of capital was transformative. They used that cash to immediately pay off their entire $67 million senior secured term loan. They wiped out the debt, they removed the restrictive covenants, and they essentially bought themselves a new lease on life. This is the kind of aggressive financial maneuvering that you rarely see in small-cap biotech, and it is a major reason why the stock reacted so violently to the FDA news. For those who are new to the company, let's look at what Omeros actually does. They are a biopharmaceutical firm focused on the complement system, which is a part of the immune system that can cause massive damage if it becomes overactive. Before this approval, there were literally no approved treatments for this condition. This gives Omeros a first-mover advantage and a complete monopoly in a high-value orphan disease market. This isn't like selling a generic medication. It's about providing a life-saving therapy that can command significant pricing power. Beyond the transplant drug, they have a massive pipeline. Their partnership with Novo Nordisk is for a drug that targets paroxysmal hemoglobinuria and other rare blood disorders. By offloading the development costs of that asset to a giant like Novo Nordisk while retaining huge milestone potential and royalties, Omeros has managed to de-risk their future. They're also still collecting royalties from Omidria, an eye surgery product they sold to Rayner Surgical, which means they have multiple streams of incoming cash, which is a far cry from the pre-revenue biotech label they carried for so long. If you were a self-investing enthusiast using Robinhood stock trading or the SoFi trading platform, you might be wondering if the ship has already sailed. This is where we look at the future outlook. The launch of Yartemlea is scheduled for early 2026. This means the next few quarters will be about building out the commercial infrastructure. The expectation is that the launch will be slow, as is typical for rare disease drugs. However, the reality could be much faster because of the desperate need for this treatment in transplant centers across the country. There is no competition. Hospitals have been waiting for this. If the adoption rate exceeds the conservative estimates currently modeled by analysts on investing sites, we could see another leg up in the stock price. Comment below how many shares of Omeros you currently hold, or if you think the recent spike is a sign of a broader biotech bull market. The risks, of course, are still there. Even with the Novo Nordisk cash, commercial launches are expensive. If Omeros burns through their capital too quickly trying to market Yartemlea, they might need to return to the capital markets for more funding. Additionally, any hiccup in the manufacturing process or a slower than expected uptake by insurance providers could dampen the current enthusiasm. Investors using Schwab Intelligent Portfolios or other automated online investing tools might not see these nuances, but for those doing deep research, these are the variables that will determine if OMER hits the $30 price targets some analysts are now floating. Compare this to the volatility we see in something like Tesla stock. In the tech world, we often trade on hype and future promises. In biotech, and specifically with Omeros right now, the trade is based on a tangible legal right to sell a unique medicine. That is a much stabler foundation for long-term growth. While many people are distracted by the shiny objects in the AI sector or tracking the latest moves in their Robinhood crypto wallet, the real wealth is often built in these quiet corners of the market where a company finally proves its worth after years of struggle. Looking at the broader landscape of online investment, it is clear that the appetite for risk is returning. When a company like Omeros can jump 75% in a single day, it sends a signal to everyone using Fidelity Investments or the Interactive Brokers platform that the bottom is likely in for high-quality clinical data. The days of every biotech stock being sold off regardless of news seem to be ending. This provides a much better environment for investment help and for those who enjoy the challenge of picking individual winners in their Fidelity brokerage or SoFi active investing accounts. The debt situation is particularly interesting. By paying off that senior secured loan, Omeros removed a $25 million minimum liquidity covenant. That covenant was a noose around their neck, forcing them to keep cash on the sidelines that they could have been using for growth. Now they are free. They have over $200 million in the bank and a clear path to generating sustainable revenue. For a company that was once being discussed in the same breath as liquidation, this is a total reversal of fortune. It is a reminder that in the stock market, reality eventually catches up to the narrative, and when it does, the move is often explosive. If you are managing your own Fidelity IRAs or looking for growth in your individual brokerage, Omeros represents a classic case of the unloved stock becoming the market darling. Most people were too afraid to touch it at $3 or $4. Now that it's at $15, everyone is trying to figure out how to get in. This is the irony of self-investing. The best time to buy is often when the news is worst, provided the underlying science is sound. Omeros always had the science, they just didn't have the balance sheet or the regulatory win. Now they have both. As we look toward 2026, the catalysts are clear. We have the commercial launch of Yartemlea, we have potential milestone payments from Novo Nordisk, and we have the ongoing results from their other pipeline programs like their PDE7 inhibitor for addictions. This company is no longer a one-trick pony. It is a diversified biotech firm with a clean cap table and a multi-billion-dollar partner. While the big tech names like Apple stock might offer steady growth, Omeros offers the kind of explosive potential that can define a portfolio for the year. In summary, the story of Omeros is one where the reality of a solid scientific foundation and aggressive financial management finally overcame a negative market expectation. The stock price of $15.36 USD is a reflection of a company that has successfully navigated the most difficult period of its history. They have killed the debt, secured a life-saving drug approval, and partnered with a global pharmaceutical leader. For anyone using investing sites or tracking their portfolio through Fidelity Wealth Management, the takeaway is clear. The risk profile has changed.